It was sent 3-4 days before to SARC. Definitely they would have shared with you. If not, I will ask them to share with you in the WhatsApp group or wherever, or email. They will definitely share with you. No need to worry about that. Okay. So let us start the first problem, friends. A, B, and C carried on business in partnership, sharing profit loss in the ratio of 3:1. They decided to convert their business into a private limited company. See, a partnership is getting converted into a private company. They are forming a new company, Prospective Private Limited, with an authorized capital of 6 lakh. 45,000 shares of 10 15,000 cumulative preferred shares of 10 So put together 6 lakh is the authorized capital. Company took over the firm's business on 31st March 8. The firm's balance sheet stood as under. Oh, if it is not shared, I will ask them to share with you. But just for the moment, you can take note of this. I will inform them to share. Okay. So please go through the problem. The capital accounts and current accounts. Of the partners. In the current account of A and B, there is a credit balance. When they say less C, in the current account of C, there is a debit balance. A's loan, a partner is given loan also, creditors, fixed assets at cost, less depreciation, machinery, motor car, furniture, current assets, stock, debt or bank. Total. The debtors are all good, taken over by A, who also agreed to pay the creditor. Company took over machinery at book value, stock at agreed value of lakh and 66, furniture 4,500, motor car 16,000 and the bank balance. The value of goodwill of the firm was agreed at 40,000. The company also agreed to discharge A's loan by issue to him at par of 3,000, 6% cumulative preference shares of 10 each, cash payment of 10,000. Consideration to discharge by the company by issue at par 30,000 shares of 10 each, balance in cash. Required to prepare the necessary accounts to close the books of the firm. So friends, in this problem, what is happening? There is a partnership firm. They want to convert their firm into a company. So they have to dissolve the firm, form a new company. The partners of the firm will become the shareholders of the company. And the company has to pay a certain consideration to the partners of the firm. What will be the consideration? The problem says 30,000 equity shares of 10 each, balance in cash. So first you have to find the total consideration. In that 3 lakh will be by issue of equity shares, balance will be by cash. A's loan, that is a partner's loan, is not settled by the firm. It is taken over by the company. After it is taken over by the company will make settlement to A's loan by issuing to him 3,000 cumulative preference shares of 10 each and the cash payment of 10,000. So 40,000 payable to A's loan will be discharged by the new company, not by the firm. So as far as the firm is concerned, A's loan is taken over by the new company. So the company takes over assets, machinery, motor car, furniture, stock and bank balance, but not debtor. So other than debtor and creditor, all the assets and the liability, that is including A's loan, is taken over by the new company. And the values at which they are taken over is also given in the question. In addition, for the purpose of takeover, they have determined the value of goodwill of the firm. So all that has to be considered to calculate the purchase consideration. And out of that consideration, 3 lakh will be by issue of equity shares, balance will be by way of cash. So keeping all that in mind, you are required to prepare the necessary accounts to close the books of the firm. See, the problem doesn't specify the accounts to be prepared. They say prepare the necessary accounts. So this is a problem on dissolution where a firm is converted to a company. How to close the books of the firm? By preparing certain accounts. What are the accounts we have to prepare? These are the accounts we have to prepare. Realization account, cash or bank account, partners capital account. So open realization account, cash or bank account, partners capital account. And since the consideration is given in the form of equity shares, open equity shares in purchasing company account, also open purchasing company accounts. So these are the necessary accounts to be prepared to close the books of the firm. If you are ready, we can start doing the problem. Now, what is the opening balance as given in the question? By balance brought down in partners account is 1,50,000 for A, 1 lakh for B, 60,000 for C. Current account of partners should also be transferred to the partners capital account because you are dissolving the firm. There is no need to keep a current account capital account separately. So the balance in current account also should be transferred to the partners capital account. For A and B, credit. For C, debit. So the balance of current account is transferred to capital account. Put the opening balance. If there is any reserve or losses, you have to transfer that to the partners capital account. There are no reserves, there are no losses given in the question. So therefore, no need to adjust that. Now, similarly, in the cash or bank account, you start with the opening balance. To balance brought down 86,000. So friends, keep doing the problem along with me so that you don't have to wait or note down later. No need to note down. Now, what are the steps involved, friends, in closing the books of a firm? Very simple. Transfer all assets and liabilities to realization account based on their book values, including bank balance. Because in this problem it is given, the bank balance is also taken over by the purchasing company. So therefore, in the realization account, transfer all assets to machinery book value, motor car value, furniture book value, stock 1,80,000 book value, debtors 52, bank 86. So all assets are transferred to realization account. Immediately in the bank account, you put by realization, debit realization account, credit cash or bank account. So all assets are transferred to realization account. Therefore, those asset accounts will be closed. Then transfer all liabilities by creditors by A's loan. Normally, partner's loan is not transferred to realization account, but we transfer here. Why? Because bank balance as well as a partner's loan is taken over by the purchasing company. Both should be transferred to realization account. So all the assets and liabilities are transferred to realization account. That step is over. What is the next one? We have to record the realization of assets and takeover of liabilities. In this problem, debtors and creditors both are taken over by A. Other than debtors, creditors, all assets and liabilities, including bank balances, taken over by the new company for which they are supposed to pay a consideration. But first we'll record debtors taken over by A. What is the entry when a partner takes over an asset? A's account debit to realization account. So in realization account by A's capital 52,000. So this gets nullified like this. Debtor is transferred to capital account of partners. Similarly, creditors also taken over by A. So you have to credit A's account and debit realization account. So realization account debit to A's capital 28,000. So other than that, machinery, motor car, stock, furniture, bank balance, A's loan, all these are taken over by the new company, Prospective Private Limited, for a certain consideration. The amount of consideration is not given in the question, but we can calculate it. How to calculate that? When the values of asset liabilities taken over are given in the question, you have to follow net assets method. Asset minus liability will give you the consideration. So for that purpose, you have to prepare working note number 1. See, working note number 1, calculation of purchase consideration. Machinery is taken over at book value, whereas motor car 16,000, furniture 45, stock lakh and 66, bank balance 86, goodwill 40. So the assets are taken over at these values. Total 377,500. Liability A's loan is taken over 40,000. Therefore, the net asset or the consideration is equal to 3,37,500. How it is discharged? 3 lakh in the form of issue of equity shares. Balance 37,500 in the form of cash. So on the one side, we have calculated what is the consideration, 337,500. On the other side, how it will be received by the firm. 3 lakh worth of equity shares, 37,500 in the form of cash. So when the assets and liabilities are taken over at a certain value, the consideration will be what? Net asset. Because the consideration includes goodwill here. Sometimes consideration is given. Then what we have to do? We have to compare the total consideration net asset. The difference will be either goodwill or capital reserve. Goodwill given in the question. Goodwill given in the question. 40,000 is the value of goodwill. Okay. Right. So we got the consideration. How do you account it? Very simple. Debit purchasing company, credit realization. So in the realization account, by Prospective Private Limited 337,500. So debit the purchasing company, credit the realization account. That is how accounting will be done for consideration, correct? Debit Prospective Private Limited, credit realization account. Now, how it is received? 3 lakh in the form of equity shares. So, equity shares account debit to Prospective Limited, 30,000 shares, 3 lakh rupees. So, in Prospective Limited, buy equity shares 3 lakh, buy cash 37,500. So, in cash account to Prospective Limited, 37,500. Kaushik, I have already sent this material to SIRC. I've asked them to share. Okay, they will share it with you. Till such time, you have to bear with this. Okay, I have already shared it. It is the institute which has to share it with you. Till such time, you have to bear with me. Okay, right. So, debit equity shares, credit Prospective Limited, debit cash, credit Prospective. So, this is the journal entry. Okay, this is the journal entry for receipt of consideration. So, with that, the purchasing company account can be closed. Now, all the assets and liabilities are realized. Some are taken over by the partner, others are taken over by the company. So, what else we have to do now? We have to find what is the profit or loss on realization that should be transferred to partner's capital account in the ratio of 3:2:1. So realization account debit to A's capital, B's capital, C's capital. Total profit is 22,500. The ratio of 3:1, you have to transfer to partner's capital. So credit the partner's capital by realization 11,250. So debit realization account, credit the partner's account. Profit on realization. Okay, right. After this, what we should do, we have to make the final settlement to the partners. Final settlement is normally made by cash. But before that, the firm has received 30,000 shares from the new company as part of the purchase consideration. So what we should do? Where we have shares as well as cash, first the shares will be distributed to the partners in the agreed ratio. After that, whatever the balance will be settled by cash. That is the way, correct? Now, in this problem, how they will share the equity shares, in what proportion it will be shared by them, is not given in the question. The firm received 30,000 shares, that's all. In some problem, they will tell you how these 30,000 shares were distributed among the partners. whether it is in the profit sharing ratio or equal or some other basis. That will be given in the question. If that is given, you can follow that. But here, in what proportion the shares will be distributed among the partners is not given in the question. But still, we will have to distribute it. In what ratio, in what proportion these 30,000 shares will be given to the partners? Please see this working note carefully, friends. When the problem is silent about the distribution of equity shares to partners, you know that the consideration of 337,500 is towards the capital of the partners, correct? What is asset minus liability? Capital. So this 3,37,500 should be distributed to the partners in the ratio of their capital, not in the profit sharing ratio. Sometimes the problem says in the profit ratio, you follow that. But the problem is silent. The 3 lakh worth of share is received against the capital due to partner. Therefore, we should divide it in the capital ratio. Now, in this problem, the partners follow fixed capital method. So we have to distribute the shares in the ratio of fixed capital. What is the ratio of fixed capital? 15 is to 10 is to 6. See, 1,50,000, 1,60,000. So in this ratio, the shares will be distributed among the partners. Suppose they follow fluctuating method, you have to find the closing balance just before the final settlement. After all adjustments, you find what is the balance in each of the partners' account. Based on the balance, we have to distribute the shares. But since they had followed fixed capital method earlier, and they are converting their firm into a company, in the new company also they should be holding shares in the ratio of their fixed capital. So therefore, the shares are to be distributed in the ratio of fixed capital. What is the ratio? 15 is to 10 is to 6. So for A, it will be 14,516, for B, 9677, for C, 5807. So that is how 30,000 shares will be distributed among the partners. 15 by 31, 10 by 31, 6 by 31. You may get some decimal fractions. Ignore it or round it off. The total number of shares is 30,000. You have to distribute it in this manner. So A will get 14,516, B will get 9677, C will get 5807 shares. This is how the shares will be distributed to the partners. It's a very important calculation. Okay. Now, when shares are distributed to partners, what is the journal entry? You have to debit the partners and credit the shares account by A, by B, by C. Correct? So how many shares will be given to A? 14,516, B 9677, C 5807. So the amount will be multiplied by 10. So that is how the total 30,000 shares will be distributed to the partners. So debit A 145160, B 96,770, C 58,007. So now that the shares have been distributed among the partners, what is left is just the final settlement. Final settlement will be made by cash, whatever the balance due to or due from a partner will be settled by either receiving money or paying money. In the case of A, you find the firm has to pay him 12,340 because the credit is more than debit. Firm has to pay A 12,340. In the case of B, the firm has to pay him 40,480. That's a difference. Whereas in case of C, debit is more than the credit. So the firm has to receive 15,320 from C. So the final settlement is 12,340 paid to A, 14,480 paid to B, 15,320 received from C. So you record it in the cash account. So in the cash account, by A's capital 12,340, by B's capital 40,480, to C's capital 15,320. So see friends, we have completed all the ledger accounts. Only capital account is pending. Sorry, cash account is pending. Check whether it tallies. Yes, that also tallies. Therefore, we have closed the books of the firm. All the partners have got their final settlement in terms of shares as well as cash. But you would like to ask me, sir, what about A's loan? 3,000 shares are given to him and all. A's loan is taken over by the new company. The new company will pay him. You are the books of the firm. So as far as the firm is concerned, transfer A's loan to realization account. Let the new company make the settlement. Firm need not bother about that. Therefore, we don't have to account for that in the books of the firm. Okay? I know most of you might have had that doubt. Made it clear. We also completed the solution, friends. You see, I've taken around 25 to 30 minutes to solve the problem in this class. Please feel free, friends, to clarify any of your doubts in this problem. Okay. If there are any questions, you tell me. Otherwise, we will go to the next problem. So let me show the entire solution on this page. You can just check we have noted down everything. In the meantime, I will call SARC and tell you to share this. Share the material with you. Just be on the line. Yes, friends, I told SARC they will share the material with you now. Okay. So does anybody have any question?
I repeat, AS loan point, sir.
Which one?
IS loan point.
I am not able to hear you properly. Yes, friends, Aditya, yeah, what is your doubt? Please ask me, I'll explain. Okay, I believe you are clear, right? We will go to the next question. Let us take the next problem, friends. So, okay, I think some of you are keeping their mic on unmute mode. Please mute it, ma, because otherwise it's very difficult for others. Please keep it in mute mode. Whenever you have a doubt, you please ask me. Others, please keep it in mute mode, okay? Okay, let us now read the problem number 2. This is a problem based on insolvency of your partner, where we should apply the rule in Garner versus Murray. Okay. It's again a very, very important and interesting question. Problems like this are very frequent in the examination, friends. Balaji, Hari, Rajesh, and Giri are partners sharing profit in the ratio of 3:3:2. Following is their balance sheet on 30th June. Creditor Balaji loan, partners capital Balaji Hari, cash at bank, debtors less provision, stock in trade, furniture fitting, trademark, drawing account of Rajesh Giri. The firm was dissolved on the date. Hari being appointed to realize assets and pay off the liabilities. He was entitled to receive 5% as his remuneration on the amounts finally paid other partners towards their capital. This is the most critical adjustment to this problem. Expense of realization that to be borne by him, assets realized as follows: debtors, stock, furniture, trademark. Creditors are paid off in full, including a contingent liability amounting to 2,500 in respect of bill discounted. Expense of realization amounting to 500 were paid by the firm. Rajesh was insolvent, only 5,700 could be recovered from his private estate. You are asked to close the books of the firm by applying the ruling Garner versus Murray. Okay, that's the question. So when one of the partners become insolvent, the deficiency arising on account of that will be borne by the other partners in their capital ratio. But the capital should be determined based on the balance as on the date of dissolution. In that ratio, the insolvency of the deficiency of insolvent partner will be borne by the other solvent partners. And that is what the rule in Garner versus Murray tells you. So you have to debit the solvent partner, credit the insolvent partner to the extent of the deficiency. In this problem, Balaji, Hari are solvent partners, Rajesh is insolvent, Giri is solvent. But even though Giri is solvent, his account shows a debit balance on the date of dissolution. Therefore, according to the rule in Garner versus Murray, Giri need not bear the deficiency. So it is only Balaji and Hari who will share the deficiency. In what ratio? Capital ratio. What is the capital ratio? It is 20 and 15, 4:3. So we have to transfer all asset and liability to realization account, record the realization of assets, discharge of liabilities. Find the realization profit or loss. Whatever money recovered from Rajesh you have to record. Balance will be his deficiency. We have to share this between Balaji Hari ratio 4:3. But before that, should also calculate what is the commission or remuneration payable to Hari. Hari takes over the realization process. So therefore is given a remuneration of 5%. So keeping all that in mind, we have to prepare the necessary accounts. What are the necessary accounts, friends? In every problem on dissolution, the necessary accounts are realization account, cash or bank account, partners capital account. So these are the necessary accounts we have to prepare. So please open all these accounts: realization account, cash or bank account, partners capital account. The top segment is debit, bottom segment is credit. You can present the partners account in this format also, or in a horizontal format. Both are allowed, but better to show debit credit correctly. Okay, so the examiner will not be confused. Or if you do not want to show it like this, you can show it in the horizontal format also. But if you show it like this, it will look nice. In one page, we can show partners capital account properly. Otherwise, it becomes cramped one. So it's my suggestion that you can show the partners account in this manner. So if you're ready with everything, what is the first step, friends? Start with the opening balance in cash or bank account 2000. And in the partners account, put the opening balance: Balaji 20, Hari 50, Rajesh 0, Giri 0. Whereas the debit of the partners account, we have Rajesh and Giri. If there is any reserve or losses, we have to transfer to the partners account. There are no such reserves or losses, so forget it. Then what we should do? We have to transfer all assets and liabilities to realization account at book value. So to debtor, book value 16,000, stock 10,000, furniture 4,000, trademarks 7,000. On the other side, provision for bad debts to be credited to realization account, creditors 15,500. So the assets and liabilities are transferred. Other than cash at bank, debtor, stock, furniture, trademark, then creditor. Provision should be taken to the credit of realization account. All that we have done. But in this problem, we have Balaji's loan. Balaji loan should be paid by the firm. So therefore, we have to open Balaji's loan account also and put the balance. By balance 10,000. This should be settled by the firm. Balaji's loan account. Balaji loan account should not be transferred to realization account because it is not taken over by anybody or any purchasing company. Now, what is the next step, friends? We have to account for the realization of assets. The realization of assets are given here. All assets are realized in cash. So therefore, we can prepare a working note like this to calculate the assets realized. It will be easy for us. Debtors 11,000, stock 8,000, furniture 1,000, trademark 4, total 24,000 asset realized. Entry cash or bank account debit to realization account 24,000. The corresponding credit will be in the realization account by cash or bank 24,000. So cash account debit to realization account 24,000. So all assets are realized over. Now we have to pay off the liability. Sundry creditor 15,500 is there. The problem says sundry creditor were paid off in full, including a contingent liability of 25 respect of bill discount. So creditors is paid. There was a contingent liability also, that also you have to pay. So the total amount paid will be 18,000 rupees. Debit realization account 15,500 plus 2,500. Realization account debit to cash or bank account. This is for payment of creditors and contingent liability. So assets realized, liabilities paid off. What about realization expenses, if any? According to the problem, expense of realization to be borne by him. Who is that him? Him is Hari. So a partner will bear the realization expenses. So we need not make any entry for that. But the problem tells you later the expense of realization amounting to 500 are paid by the firm. Who has agreed to bear that? Hari. But who has paid it? Firm. So when the firm pays for the expense on realization, it should be recovered from Hari because he has agreed to bear that. So therefore, what is the entry for that? We have to debit Hari, credit cash account for that 500. See, when it is borne by the firm, we have to debit realization account, credit cash account. But here it is borne by Hari, but paid by the firm. So we have to debit Hari's capital, credit cash or bank account. Okay. Hari's capital account debit to cash or bank account. So we have recorded realization expenses also in the problem. Now is the most important one. What is that? Hari was entitled to receive 5% as his remuneration on the amounts finally paid to the other partners towards their capital. See, Hari is appointed to realize assets and liabilities, rendering some service. He will bear the expense of realization also. So the firm has agreed to pay him some remuneration, not a fixed sum. It will be based on the amount finally paid to the other partners towards their capital. How will you find the final amount paid to other partners? Only after making all adjustments, including deficiency of insolvent partner, loss on profit on realization. After making all adjustment, really we make final settlement, is it not? On that final settlement, paid to other partners, 5% will be remuneration payable to Hari. Who are the partners to whom the firm will make settlement? Balaji. Rajesh is insolvent. He only has to pay money to the firm. In that also he is paying only a certain part. Giri, he has to pay to the firm. He has withdrawn more money. So therefore, the final settlement will be paid by the firm to Balaji only. From others, they'll collect the money. So in other words, you have to find out how much amount will be paid to Balaji finally towards his capital. On that, 5% will be the remuneration payable to Hari. How to calculate that? But remember, when they use the word finally, that is after making all the adjustments. All adjustments include sharing of deficiency, which will be determined only after recording the realization, profit or loss. But in the realization account, you have to record the commission, correct? What is the entry for remuneration payable to a partner? Realization account debit to remuneration to Hari's capital. So you have to debit realization. You have to credit Hari's capital. But what is the amount? That's what we have to find out. The amount payable to Hari will be based on final settlement to Balaji. Final settlement to Balaji will be after making all adjustment, including realization loss. But to find the realization profit or loss, Hari's capital, Hari's remuneration will be determined. So to determine remuneration Hari, you should find the final amount payable to Balaji. To determine final amount payable to Balaji, you have to close the realization account, transfer the profit or loss, find the deficiency of Rajesh, adjust it in Balaji Hari account. But to find the realization loss, you have to close the realization account. To close the realization account, you have to find Hari's remuneration. So Hari's remuneration is based on final amount payable to Balaji. Balaji's final amount is based on realization profit or loss. Realization profit or loss is based on Hari's remuneration. At least if you know what is final amount payable to Balaji, just apply 5%, get remuneration. So now we are in a fix. Are you able to understand? Balaji settlement based on Hari's remuneration. Hari's remuneration based on Balaji settlement. You are caught in a vicious cycle now. How to find out Hari's remuneration? That is the most important. Now, when I am discussing this, one of your friends, Arun, is asking, why you are putting remuneration in realization account? Tell me, where will you put it otherwise? When the firm agrees to pay remuneration to a partner, it is an expense on realization. Therefore, we have to debit the realization account only. But without determining that, you can't find the realization profit or loss. Without that, you can't find the amount payable to Balaji. So this is linked to that. But unfortunately, both are unknown. That's why I told you, friend, this is a very, very important problem. Problems like this also can appear in the examination. So friends, we have to solve this problem mathematically only. I do not know how many of you noticed this. Have you noticed this? I put X here. Since I do not know what is Hari's remuneration, I am going to assume it is X. Keeping remuneration Hari as X, I am going to find the realization profit or loss. That I will distribute to the partners. Then I will find the deficiency of Rajesh, which I will adjust in Balaji Hari. After making all this, I will know what is Balaji's capital, what is the final settlement. On that, I'll apply 5% to get remuneration to Hari. So this is the most critical calculation in this problem. Okay, friends, very, very important problem. So therefore, I am going to show you a very important working note, how to calculate remuneration payable to Hari. Okay, so let us assume remuneration payable to Hari be X. Let me show it a little bit bigger. So please follow carefully, friends. Very, very important. Let remuneration payable to Hari be X. Okay, if that is X, what will be the loss on realization? It will be 15,000 plus X. It will be in terms of X only, because Hari's remuneration is taken as X. This is already 55,000. So 55,000 plus X minus 40 will be the loss, correct? That's what I put here. This is debit side, this is credit side. So 50 minus 40 is 15,000 plus X. If the loss on realization is 15,000 plus X, what is Rajesh's share? It is 2 by 10 of that. That is equal to 3,000 plus 0.2x. 2 by 10 of 15,000 is 3,000. 2 by 10 into x is 0.2x. Why I find Rajesh's share of loss? Rajesh is insolvent partner. Insolvent partner's loss will be debited to his account. After that, you'll find what is his deficiency. That will be shared by Balaji Hari. After that, you will know what is Balaji's balance. On that, we should apply 5% to get Hari's remuneration. So please follow carefully. So what is the balance in Balaji's capital already? Already 16,000 plus loss. 16,000 debit plus another debit. That will be equal to how much? It will be 19,000 plus 0.2x. 16,000 is there already debit balance. Loss will be further debit. So add it. 16 plus 3, 19 plus 0.2x. If that is the balance in Rajesh capital, what is his deficiency? Even though Rajesh is insolvent, he'll bring 5,700 rupees. That is given in the question. See, Rajesh was insolvent, but you can recover 5,700 from his private estate. So the final balance in Rajesh will be 13,300 plus 0.2x. 19,000 plus 0.2x is the balance, but he will give 5,700. So to that extent, his debit balance will reduce. That is how much? 13,300 plus 0.2x. That is his deficiency. If this is the deficiency of Rajesh, who will bear that? As per rule in Garner versus Murray, deficiency of an insolvent partner shall be borne by solvent partner. The ratio of capital as a date of dissolution, that is 4:3. So if this is the total deficiency and this is the ratio, and Balaji Hari will share. What is Balaji's share of deficiency? It will be 13,300 plus 0.2x into 4 by 7. That is equal to 7,600 plus 0.1143x. 4 by 7 into 0.2. You can use calculator and see, you'll be getting 0.1143 into x. 4 by 7 of 1300 is 7,600. If this is Balaji's share of deficiency, his capital will reduce, is it not? We'll debit Balaji's capital with the share of deficiency. So what will be Balaji's final amount? Already the balance is 20,000 credit, but you will debit this amount, right? You will debit this amount. How much? So the final balance payable to Balaji will be 20,000 minus 76 is 12,400 minus into plus is minus 0.0143x. 0.1143x. That is the final amount payable to Balaji. If that is the final amount payable to Balaji, what is Hari's remuneration? Hari's remuneration is equal to 5% of final amount payable to Balaji. 12,400 minus 0.443x into 5%. Now tell me what is Hari's remuneration? It is x. So x is equal to 12,400 into 5% is 620. 0.1143 into 5% is 0.0057 into x. Therefore, what is x plus 0.0057x? That is 620. I want to find x. So I can take all x terms this side. It becomes plus. So this will become what? 1.0057x. So what is x is equal to? 620 divided by 1.0057. Therefore, what is x is equal to, ma? It is 616. That is Hari's remuneration. Very interesting problem. Very difficult problem. May appear to be easy, but actually it is not. Because determining Hari's remuneration is definitely difficult in this problem. Hope you understood how to calculate Hari's remuneration. You should have followed it from the beginning. But for the benefit of everybody, let me explain this once again. Okay? I'm assuming remuneration Hari to be x. Okay? First, to find the loss on realization. Already there is a debit of 55. Remuneration will increase the amount. Minus 40 will be the actual loss. 15,000 plus x. In that, what is Rajesh's share? 2 by 10. That is 3,000 plus 0.2x. Already in Rajesh account, 16,000 balance is there. Loss will increase the debit. So add it, you will get 19,000 plus 0.2x. But out of that, he will pay 5,700 given in the question. So finally, this is the amount Rajesh will not pay. That is his deficiency. If this is the deficiency of the insolvent partner, who will bear that? Balaji Hari. In what ratio? 4:3. Therefore, what is Balaji's share of deficiency? 4 by 7 of this amount. 4 by 7 of this amount, which is 7,600 plus 0.1143x. How I got 1143? 4 by 7 into 0.2 into x. If this is Balaji's share of deficiency, it will be debited to his account. If you debit this to Balaji account, the balance of Balaji will reduce because already there is a credit balance of 20,000. So 20 minus of this will be equal to 12,400 plus 0.1143x. Okay. Now, if this is the final amount payable to Balaji, what is Hari's remuneration? It is 5% of this. So x is equal to 5% of final amount payable to Balaji. So now you got an equation in x. Finally, when you solve for x, it is equal to 616. So this is how we have to determine Hari's remuneration, 616. Are you clear, friends? Okay. Now that we found out what is Hari's remuneration, we have to record it in the realization account, correct? So let us go to realization account, record it. Realization account debit to Hari's remuneration 616. So immediately in Hari's account, you put by realization 616. So debit realization, credit Hari's capital. Now friends, we can find the realization loss, which is 15,616. 15,616 is the loss which will be shared by the partners in the ratio of 3322. So debit partners account to realization loss. 4685, 4685, 3123, 3123. This is the journal entry for realization loss. Debit partner, credit realization. So realization account is completed. Now what we should do, friends? The total amount due from Rajesh is 19,123 because he's an insolvent partner. So much money he has to bring, but is able to bring only 5,700. But before that, one very important point we should remember. If there is a realization loss, according to the rule in Garner versus Murray, the solvent partner should bring cash to the extent of their share of realization loss. Now, who are the solvent partners? Balaji, Hari, Giri. These are the solvent partners. These three should bring cash to the extent of their share of loss. But Giri capital shows a debit balance. So even though Giri is solvent, he need not bring any cash towards his share of realization loss. So therefore, Balaji and Hari should bring 4685, 4685 in cash. That is as per rule in Garner versus Murray. Many times we forget that. But in exam, if you forget, at least 2 marks will be deducted. So please Remember that carefully. As per rule in Garner-Murray, if there is a realization loss, solvent partner should bring cash immediately. Why not Giri? Giri is already having a debit balance. He need not bring money. Why not Rajesh? Rajesh is already inside. So this is one thing which we normally forget in the exam. And even though an answer may be right, since you have not done this, out of 15 marks, 2 marks may be deducted. So remember this carefully. So debit cash, credit partners. Loss on realization brought in by the solvent partners. Now Rajesh brings how much? 5,700. So in Rajesh account, you put by cash or bank 5,700. Cash brought in by insolvent partner. So out of 19,123 amount due from Rajesh, he brings only 5,700. Balance is unable to bring. That means that is the deficiency of Rajesh. If there is a deficiency in a partner's account, the deficiency of such partner will be borne by the solvent partner, namely Balaji Hari only, not Giri, because of debit balance. So what will be Balaji's share? What will be Hari's share? And how to account it? Accounting is very simple. You have to debit Balaji and Hari and credit Rajesh and Balaji Hari should be debited, Rajesh should be credited. How to calculate the amount? For that, I have prepared a working note. This is as per rule in Garner-Murray. What is Rajesh's deficiency? It is 13,423. 16,000 plus 3,123, that is share of loss, minus money brought in by him, 13,423. As per rule in Garner-Murray, this should be borne by solvent partner having credit balance in their account as on the date of dissolution. So therefore, what is Balaji's share? What is Hari's share? Depends upon ratio 4:3. So Balaji's share of deficiency will be how much? 13,423 into 4/7. Debit Balaji capital, debit Hari capital, credit Rajesh capital. So Balaji's share is 7,670. Hari's share is 5,753. Total deficiency 13,423. So this is the working note for sharing of Rajesh's deficiency. So debit Balaji 7670, debit Hari 5753, credit Rajesh 13,423. This journal entry we should record in the partner's account. So debit Balaji how much? 7670. Hari 5753. So credit Rajesh 76705753. So this is the journal entry for sharing of deficiency of insolvent partner. Now we have to make the final settlement. But in case of Giri, he is supposed to bring 9,123. He is solvent, he can bring that amount. What is the entry? Cash account debit to Giri Capital 9123. So Giri has made the final settlement by cash or bank. So entry cash or bank account debit to Giri's Capital 9123. So Giri account is settled. Now we have to make the final settlement. Now while I am doing this problem, one of your friends, Monish, is asking a question. Sir, you are calculating Hari remuneration based on Balaji's capital only. What about other partners? Now, Monish, you would have understood now itself that the firm makes settlement to Balaji only, not to Giri. Giri only brings money. To whom the firm makes settlement? Balaji. So from Rajesh, firm collects money. From Giri, firm collects money. So between Balaji and Hindi, who is the other partner? Balaji only. Therefore, Hari's remuneration should be determined based on final amount paid to Balaji only. Because from other partners, the firm is collecting money. They are not making any payment. Okay, that's all. So you might be wondering why I am not answering that question. I was waiting for this to answer your question. Now, friends, therefore, what is the final settlement? Very simple. To Balaji, the settlement is 12,330. To Hari is 9363. Balaji, Hari to cash or bank. So in cash account, by Balaji capital, by Hari capital, 9363. Check whether remuneration to Hari is 5% of 12,330. Because what is the final settlement to Balaji? 12,330. What is 5% of that? It will be 616. You can check. I'm sure you got this number. Correct. Don't say, sir, I got 616.5 and all. We have to ignore the decimals. So have we done the problem correctly? The final settlement to Balaji is 12,330. 5% of that is 616. But then whether the cash account tallies, it doesn't tally. Why? It doesn't tally because we have not made settlement to Balaji towards loan account. Therefore, friends, don't forget. See, Balaji loan account is there. We have to pay that, right? So, make settlement towards Balaji loan account debit to cash account. Without doing this, your cash account will not tally. So, therefore, friends, we settle Balaji loan. We have made settlement to partners. Check whether cash account tallies. Definitely tally. It is 50,193. Before that, it may not have tallied. Is it not, friends? So in every problem on dissolution, the cash account should tally. There should not be any balance in the cash account once you make the final settlement. So, it's a very interesting and a difficult problem, is it not, friends? That's why I thought I should do this in the rapid revision class also. Because what you know already, if I do that, it is not going to help you. So something different, something difficult, some more value addition. That's what we thought. We should do this problem. Pooja, if there is realization profit, credit the partner's account. That's all. No further adjustment. If there is a realization loss, you have to debit the partners. And because it's a loss, the firm has less money. Therefore, they ask the partner to compensate. If there is profit, that means they have more money. What is the point? We have to just make the final settlement after the deficiency is borne by the solvent partners. That's all. Mostly in problems on Garner-Murray, there will be realization loss only, may not be profit. Okay? Because then only there is some challenge in doing it. Otherwise, there is no challenge, no? So therefore, it will be realization profit only. Okay? Yes, friends. Let me show you various ledger accounts followed by the working notes. Working note number 2, remuneration to Hari 616. Working note number 3, sharing of Rajesh's deficiency. Friends, you might have seen the same problem or a similar problem in the study material also. Probably you couldn't understand at that time. At least now, you might have understood this solution completely. Okay. Yes, friends, in the first segment of this session, the 1.5 hours, we're able to do only 2 problems. But I don't have a problem in that because as long as you understand what we are doing in the classroom, that's well and good. I'm not hurrying up anything. If you understand everything, that's what we want. So after this, friends, we are going to take a break of 10-15 minutes maximum. After that, we are going to do the next problem on dissolution. So Mahendra wants to know why only Balaji Hari will bring cash, because they are solvent partners. Rajesh is insolvent. Giri is solvent, but they have a debit balance in his capital account, according to rule in Garner versus Murray. According to rule in Garner versus Murray, it is only the solvent partner who should bring cash towards realization loss. But if the solvent partner happens to have a debit balance in his account, even that partner need not bring cash. Therefore, only Balaji and Hari brought in cash, not Rajesh and Giri. Okay, friends, it's time for us to take a break. You can feel free to ask any doubts in the chat. I will try to answer it. Okay. So join after 10-15 minutes. We will do more problems. Yes, friends, let's now start. I think now you have got the material with you, right? It has already been shared with you. That's what I understand. So please read the next problem. This is also based on insolvency of your partner. Ramesh, Rajesh, and Suresh were partners. After transferring 1/10 of the profit to reserve, they were sharing profit loss ratio 5/10, 2/10, 2/10. So, what is the meaning of this? If the profit is 10 rupees, 1 rupee will go to reserve, 5 rupees will go to Ramesh, 2 rupees to Rajesh, 2 rupees. That is the understanding. Okay. So, therefore, after transfer of reserve, only 9 rupees is available, which will be shared in the ratio 5:2. So the actual profit sharing ratio is 5/9, 2/9, 2/9. Okay. On 31st March, the balance sheet stood as under capital account Ramesh, Rajesh, Suresh, reserves, creditors, fixed asset, stock in trade, debtors plus provision, cash. This is the most important segment in this problem, friends. On 1st April 2008, the firm was dissolved. It has then discovered goods purchased on credit for 1,000 on 26 March included in stock, but this purchase was not recorded in the books. So before 31st March, there were some mistakes. Without rectifying the mistakes, accounts were prepared, balance sheet is complete. But when you dissolve the firm, all the errors should be rectified. You have to find the correct balance of partners account. Then only the dissolution process can be done. And of course, the final settlement can be made, right? So once they decided to dissolve the firm, they discovered that there were some mistakes. They purchased some goods last year, but they did not record. They taken that in stock, but they didn't record in purchase. Check from debtors amounting to 1,000 omitted from the books of accounts. They got a check from a customer, they didn't record it. And appropriated by Suresh for his own use. Suresh has taken the money and used it for his own purpose. Not correct. No partner can make a personal profit out of the business. Suppose he makes, he has to compensate the firm and other partners for that. Is it not? You have to recover this money from Suresh. Goods costing 1,500, just removed and sold by Suresh for 1. So this is another thing Suresh has done. Removed and sold. Removed and sold means he has stolen the goods. When nobody noticed, he removed it, he sold it. Cost of those goods 1,500, but he sold it for 1,000. But had he not sold it, all the partners agree that the goods should have realized 1,800. So the firm could have sold it for 1,800, but Ramesh sold it for 1,000. This also is a personal benefit gained by Suresh, that also to be recovered from him. But how much you will recover from Suresh? Not 1,000. You will recover 1,800 from Suresh. Because if the firm had sold, they would have got 1,800. Suresh sold it and keeping the 1,000 with him. So you have to collect 1,800 from Suresh. So we have to make these adjustments, friends, for the purpose of determining what is the balance of partners' capital as on the date of dissolution. Why? According to rule in Garner versus Murray, if there is a deficiency on account of a partner's insolvency, that will be borne by other partners. in the ratio of capital as on the date of dissolution. Before April, all these things happened, but they didn't record it. Without recording that, they determine the profit, they prepare the balance sheet. But these all pertain to the period before that. Therefore, in order to find the partner's capital as on the date of dissolution, you have to make these adjustments. Based on that capital ratio, the efficiency will be borne by the solvent partners. So a creditor agreed to take some stock for book value 4,000 for 3,000 money. So a creditor is settled by providing them goods. For this, we should not make any entry. Why? We are not paying money, we are giving them goods. Goods are already transferred to realization account. Creditors also already transferred to realization account. So in the course of dissolution, we should not make any entry when a liability is discharged by exchanging any assets with them. There could be a difference between what you give them and what is the value. Then also, you don't have to record it. So no entry for this transaction. Others, so out of 15,000 rupees, 3,000 is paid by way of giving them goods. Balance is paid at a rebate of 10%. After realizing asset, fixed asset 6,000, debtors 10% less than book value, stock 50% book value, excluding those accepted by creditor. So the total stock is 15,000 rupees. In that, 4,000 worth of stock is given to creditor. Only balance is realized to the extent of 50%. Expense of dissolution to be borne by Rajesh, who was to receive as his commission 2% of realization. This is not difficult, friends, unlike the earlier problem. Commission will be 2% of realization. Whatever money realized from assets on the 2%. It is not based on the final settlement to other partners. Okay. Suresh proved to be insolvent with no surplus from his private estate. So from Suresh, you are not able to recover even 1 rupee. So whatever be the balance due from Suresh, that will be a deficiency to be borne by Ramesh Rajesh, the ratio of capital after making all these adjustments. Write up the necessary ledger accounts. After the deficiency is borne by Ramesh and Rajesh, whatever is the final settlement will be made by the cash that is available. Write up the necessary ledger accounts to close the books of the firm. What are the necessary ledger accounts? As usual, realization account, cash or bank account, partners, capital account. These are the necessary ledger accounts we have to prepare. But friends, in this problem, we have to prepare the partner's account in 2 segments. One before dissolution, 2 in the course of dissolution. Because there are certain adjustments to be done before dissolution to find the balance of partner's capital as on the date of dissolution. So where there are errors, firstly rectify that, find the correct capital, then only we start accounting for the dissolution. So keep this all ready. Realization account, cash or bank account, partner's capital account. But before you do that, we have to prepare accounts before dissolution. Particularly partner's capital account. Okay. This will be working notes. Okay. What will be shown first will be the 4 accounts, 3 accounts. Realization account, cash or bank account, partner's account. That will be in the course of dissolution. Okay. But before dissolution, we have to rectify the mistakes, prepare the partner's capital. Then we should start accounting for dissolution. Okay. So let's start with the balance as given in the question. Ramesh 6,000, Rajesh 8,000, Suresh 4,000. Working note number 1, partner's capital account before dissolution. There is a reserve we have to transfer to partner's account, ratio of 5 to 2, that is 10,000, 1,000 rupees, 400 rupees, 400 rupees. Reserve is 1,800. The reserve is created when? Before 31st March. So we will transfer that to partner's account. This also will affect the partner's capital as on date of dissolution. Not only these, friends, there are few rectification entries we have to make. And the effect of rectification may result in a change in profit. When profit changes, it will affect the partner's capital, is it not? So what is the first adjustment given in the question? Goods purchased but not recorded. So we would record the purchase. Of course, first I put reserve entry. To Ramesh, to Rajesh, to Suresh, ratio 5:2. These are the journal entries before dissolution. First entry. Second entry. Recording the purchase. When you record the purchase, what will happen? Profit will reduce. When profit reduces, capital will reduce, is it not? So directly, I am going to make an entry for that. Ramesh account debit, Rajesh account debit, Suresh account debit to creditors. Why I am crediting creditors? You purchased the goods, but you did not record the purchase. So original entry will be what? Purchase to creditor. When you record purchase, profit reduces. Profit reduces, capital reduces. So debit capital account, credit creditors account. The ratio of 5:2:2. 1,000 rupees creditors. You are introducing a liability. Liability introduced results in loss. Loss will be adjusted in the partner's capital. So debit partner's capital, credit creditors. Next one. Check received from debtor taken by Suresh. You have to recover that from Suresh. Suresh capital account debit to debtor. Suresh took the money, debit Suresh. Debtors gave the money, credit debtors. These are the rectification entries. So in Suresh account, you should put to debtor. So to that extent, debtor balance will reduce. Suresh balance also will reduce. Similarly, when you record the creditor balance will increase. Keep that in mind. Now, some goods were removed and sold by Suresh for 1,000 rupees. But if it was sold by the firm, they would have sold it for 1,800. You would recover that much money from Suresh. So it is as if the goods were sold to Suresh. Actually, firm did not sell, but he took it. But you would recover that money from Suresh. So record it as if the goods were sold to Suresh. So in Suresh account, 2 sales, 1,800. Now, if you record sales, income will increase, no? That should be taken to P&L adjustment account. Because it's an income. We are recording an income. So transfer the sales to P&L adjustment account. And this being a gain, this will be transferred to the partner's account in the ratio of 5:2:2. So 1800, 1000 for Ramesh, 400 for Rajesh, 400 for Suresh. So these are the journal entries you have to make for the rectification. So you have to credit Ramesh, Rajesh, Suresh, 1000, 400, 400. So all these are very, very important adjustments. And why we do that? To determine the correct capital of the partners. So after doing this, we have to find what is the balance in the partner's capital account. Why we determine that? So this is the actual balance of Ramesh, Rajesh, and Suresh as on the date of dissolution. So if there is a deficiency on account of a partner's insolvency, that will be borne by Ramesh and Rajesh in the ratio of 7444:8578. For that purpose only, we have to calculate this, prepare the partner's account before realization. Okay. Now that accounting is done before dissolution, we can start accounting in the course of dissolution. The first step is to put the balances in partner's account, put the balance by balance carried down 7444:8578:1778. Similarly, in cash account, there is a balance of 400 that also record. There is no debit balance in the partner's account as on date of dissolution. All the partners have credit balance only. Now we have to transfer all assets and liabilities to realization. Fixed asset 10,000, stock in trade 15, but debtors 9,000 only. Why? Original balance is 10,000, but a debtor paid 1,000. You didn't record it earlier. Now you record. What will happen? Debtors becomes 9,000. On the other side, you have to transfer the provision PBD 600. So then creditors. Creditors should be recorded at 16,000, not 15,000. Why? 15,000 is original creditor, but we recorded another purchase of 1,000 goods purchased on credit 1,000. So the creditors will increase to 16,000. So we have recorded assets and liabilities at book value. So while I am doing this, Kaushik is asking, sir, why didn't you reduce goods sold from stock in trade? Very good question. But Kaushik, we should understand the goods were removed and sold before 31st March. So already the stock of 15,000 is after reducing that only. Because once the goods were sold, it will not be there in the godown. So no need to reduce it once again. So the stock in trade of 15,000 is after reducing goods stolen by Suresh. Okay. No need to or you should not deduct it from the value of stock in trade. I know some of you would have made that mistake. See, the balance sheet is prepared on which date? 31st March 18th. When did Suresh steal the goods? Before that date. Therefore, the stock of 15,000 is after reducing this only. So don't reduce it once again. Okay. Now we have to realize the assets. We have to make entry for realization of asset. What is the entry? Cash account debit to realization account. Debit cash, credit realization. How much is the asset realized? Given in the question. Fixed asset 6,000. Debtors 10% less than book value. Stock 50% of book value. So since all are realized by cash, let us prepare a working note for that. Fixed asset, how much? 6,000. Debtor 90% of 9,000. That is a book value. Now, stock 50% of goods, excluding those accepted by creditors. Out of 15,000 stock, 4,000 given to creditor. Only balance is realized at 50%. That is equal to 5,500. So total fixed asset realized 19,600. Similarly, what is a payment made to creditor? Total amount payable is 16,000. But out of that, you have given stock to discharge 3,000 of creditor. So the balance is 13,000 rupees. That only we have to pay in cash. How it is paid? At a rebate of 10%. So deduct it. So this is the actual amount paid to creditors. So asset realized is 19,600. Creditor paid is 11,700. We have to record it in the realization account and the cash account. Very carefully, we have to do this calculation, friends, because here also some students make mistake. They put 50% of 15,000, 90% of 10,000. All that is wrong. Similarly, for creditor, 16 is payable, but for a creditor to whom you have to pay 3,000, you are given goods. So that got reduced. Balance 13 only we have to pay. But how do we pay? At a rebate of 10%. That means the actual amount paid to creditor is 11,700 only. So therefore, we should record it in the cash account to realization 19,600, realization account by cash 19,600. Then creditors paid how much? 11,700. Credit, cash or bank account. Payment made to creditors. 4,000 rupees worth of goods given to creditor. You need not make any entry for that. Why? Stock is already transferred to realization. Creditors also transferred to realization account. Therefore, you cannot make an entry for this. Is there any realization expenses given in the problem? Yes, you have to read it. See, the expense of dissolution to be borne by Rajesh. So Rajesh need not, see, Rajesh will bear the expense. But for taking care of the dissolution, he will be receiving a commission of 2% of realization. So if the realization amount is 19,600, what will be commission to Rajesh? It will be 2% of this. So the commission payable to Rajesh will be 392 rupees. Realization account debit to Rajesh Capital 392 for the service rendered by him. Realization expenditure, commission paid to partner. That's all, friends. All assets are realized, all liabilities are discharged. We have to find the realization, profit or loss. In this problem, there is a loss of 9892 transferred to partners account. Ramesh, Rajesh, Suresh. So debit partners capital, credit realization account. So realization account is closed. The loss is transferred. Now remember, this is a problem on insolvency of your partner. There is a realization loss. According to rule in Garner versus Murray, solvent partner, namely Ramesh and Rajesh, should bring cash to the extent of their share of loss. What is the entry? Cash account debit to Ramesh, to Rajesh. So in Ramesh Rajesh by cash as per rule in Garner versus Murray. So debit cash or bank, credit partners account towards realization loss. This is one thing, friends, which students normally forget. Please don't forget this. If there is realization profit, no need to bring any cash. It will be credited to partner's account. There is no need to compensate. Only when there is loss, you have to compensate. When there is profit, you gain. What is that to compensate? Okay. Now what we should do? Suresh is insolvent with no surplus. He is supposed to bring 2198, but his capital is 1778. Therefore, in Suresh account, there is a deficiency of how much? $420. That is his deficiency. Who has to bear the deficiency? Ramesh Rajesh. What is the ratio? This is the ratio. So debit Ramesh, Rajesh to Suresh. So in Rajesh account by Ramesh, by Rajesh, ratio 7444 is to 8578. That is the capital of the solvent partners as on the date of dissolution. Okay. How I got 195? $420 into 7444 divided by 7444 plus 8578. So denominator is the total, numerator is Ramesh's capital multiplied by deficiency. And for Rajesh, it is a difference. 8578 into 420 divided by the total. So Suresh account is tallied. Correct? Now what is left is the final settlement to Ramesh and Rajesh. Whatever cash is available will be distributed to Ramesh and Rajesh now. Find the final amount due to Ramesh Rajesh 7248745. So in the cash column, by Ramesh capital, by Rajesh capital, 72498745. So with that, you find partner's capital account is also closed. Check whether cash account tallies. Yes, that also tallies 27,694. 2627694. That is the final total of cash and bank account. So you can see, friends, all the accounts are closed. So in every problem or dissolution, cash or bank account will automatically tally. The reason is very simple, is it not? The books of accounts are closed. Business is closed. All assets sold. All liabilities discharged. Settlement made to partners. Will there be a balance in cash? Should not be there. Okay, that's it. So this will be the main solution: realization account, cash account, partners account, followed by various working notes. Working note one for partners account before dissolution, 2 for asset, 3 for creditors. Journal entry is your option. If you want, you can put it in the exam, or you can just leave it as it is. There is no compulsion. So this is how, friends, we have to solve this problem. I have taken only very difficult problems, standard problems, from the point of view of examination. And with whatever time that is available, we can do only this much, is it not? I hope you will understand. Okay, friends. Now we will take up the next problem. Before that, have any questions? Have any doubts? You want to see any particular segment of the answer? Please feel free to ask me. Let me show that, explain that. Then I will go to the next problem. All these problems are interesting, important, exam standard, new problems. Probably you may not have seen problems like this earlier. Yeah, friends, I don't find anybody posting any question. So I'm assuming all of you are clear. Okay. These answers should be noted down by you in the classroom. You have to do these problems along with me in the classroom. I will not share these answers because if I share these answers, you will not have practice. I want you to practice. That's why I told you in the beginning itself, don't wait till I complete. You may not have time to note down. The best way is to do the problem along with me. Okay, so I will not be sharing the answers with you, but I'll be solving the problems for you in the classroom. You are expected to note it down or try to understand and then do it on your own. I don't want to share the answer because it will not be useful to you, friends. Let's take up the next problem. Messrs. P & Co. is a partnership firm consisting of PB and S who share profit loss in the ratio of 2:1. Messrs. Briggs Limited is a company doing similar business. So they are given the balance sheet of P & Co. as well as Briggs Limited. So this is the balance sheet of Briggs Limited. And this is the balance sheet of P & Company. So balance sheet of P & Co. Balance sheet of Briggs Limited, both are given to you. So equity share, then partners capital, PDS, reserve, creditor, plant and machinery, furniture, stock, debtor, cash at bank, cash in hand. They decided that P & Company will be dissolved. All assets except cash in hand, cash at bank. All liability of the firm will be taken over by Briggs by issuing 25,000 shares of 10 each at a premium of 2 per share. The shares will be divided between the partners in the ratio of their capital. So how the shares will be divided? Ratio of capital. Sorry, profit sharing ratio, they will share the equity shares. Balance settlement will be made by cash. Creditors of P & Co. include 50,000 payable to Briggs Limited. Unrecorded liability of 12,500 must also be taken over by Briggs Limited. Prepare realization account, partners capital, cash in hand, cash at bank in the books of P & Co. Journal entry in the books of Briggs Limited for acquiring P & Co. Balance sheet of Briggs Limited after acquiring P & Co. So 3 things. Closing the books of the firm. You have to prepare 3 accounts: realization, capital, cash in hand, cash at bank. In the books of the purchasing company, you have to make journal entry and then you have to prepare the balance sheet. Problems like this can fetch you easily 15 marks in the exam. Okay. So let's start. So what are we supposed to do, friends? These are the things we have to do in the books of P & Co. We have to prepare realization account, cash and bank account, partners capital account. I've also prepared Briggs Limited account, but not a compulsion. I prepared it for our easy understanding. After that, you have to show journal entries in the books of purchasing company like this. So first, we are preparing the ledger accounts of P & Co. Realization, partners capital, purchasing company, cash and bank, cash column, bank column. Then I've also prepared equity shares account in Briggs Limited. If you want, you do. Otherwise, you don't have to prepare this. After that, I am showing journal entries in the books of Briggs Limited Purchasing Company. That is B. What is C? C is balance sheet of Briggs Limited after acquisition. And since Briggs Limited is a company, the balance sheet should be prepared in the proper format as per Schedule 3 of Companies Act. Vertical format, particulars, note, rupees. And wherever required, you have to prepare the note. Share capital note number 1 and so on. So friends, this is the format. This is how we are going to solve this problem. After this, if there is a requirement, we are going to prepare a working note. If necessary, we are going to prepare a working note. So let's now start. The books of P and Co. Record the opening balance of cash in bank first. Please do it along with me. See, then only you will know how much time it takes. I can share the answer, but you will again just keep it and refer it. You will not know how to do it. So that's why I am suggesting you do it with me. That will be a good practice for you. Seeing will help you to some extent. Observing will help you more. But doing the problem, that will help you to a great extent. That's why I didn't want to share the answer with you. Okay. So transfer all assets and liabilities to realization account. Realization to machinery, furniture, stock in trade, debtors, all assets transferred at book value. Transfer liabilities, creditors, 1,50,000. That's all, only one creditor. All the assets and liabilities excluding cash is taken over by purchasing company. They've agreed to pay a consideration of 3 lakhs, 25,000 shares of 10 each, 12 each. So there is no great difficulty in calculating the purchase consideration. Debit, Briggs Limited, credit, realization, 25,000 shares of 12. Face value 10, but issued at 12. So 3 lakh is the purchase consideration. Put the balance in the partner's account. By balance, 1 lakh, 150, 50,000. Current account is also given in the question. If it is given, we have to transfer that. No, we have general reserve that should be transferred to partner's account. By general reserve, 2:1. 20,000, 20,000, 10,000. So any debit is there. No loss. But check, friends. Is there anything else in the realization account? Nothing. So find the realization, profit or loss. So the loss is 25,000. Transferred to partner's account, the ratio of 2:1. 10, 10, 5. So that is a journal entry for realization loss. Debit, partner's capital, credit, realization account. 10,000, 10,000, 5,000. Now, this is not a problem on deficiency or insolvency. So don't try to bring cash and all. Okay. No partner is insolvent here. No need to apply Gardner versus Murray. So only when you find that a partner is insolvent, you're going to apply Gardner versus Murray. Loss should be compensated by the solvent partner. So don't put that entry in every problem. So now what we should do, friends? Briggs Limited agreed to pay 3 lakh, but how? In the form of equity shares. So buy equity shares in Briggs Limited 3 lakh. So with that, Briggs Limited account will be closed. Equity shares received from Briggs Limited, 25,000 shares, 3 lakh rupees. So what is the entry for consideration received? Debit equity shares, credit purchasing company account. Equity share account debit to Briggs Limited account. Now there are 25,000 shares for 3 lakh rupees. How they have decided to share it among the partners? In their profit sharing ratio. Partners of P & Co agreed to divide the share in the profit sharing ratio. Bring necessary cash for settlement of capital. So the 25,000 shares will be transferred to the partners account in the ratio of 2:1. So we have to credit equity shares account by P by B by S, the ratio of 2:1. 10,000 shares, 10,000 shares, total 25, lakh and 20, lakh and 20, 60, total 3 lakhs. So the 25,000 shares received by the partners is credited to equity shares account and debited to partners account. Two equity shares, lakh and 20, lakh and 20, 60. So debit partners account, credit equity shares account. That is a journal entry. Equity shares transferred to partners. Debit partners capital, credit equity shares account. That is a journal entry. Debit partners capital, credit equity share. So with that equity shares account also tally. Now what is left is nothing but the final settlement to the partners, which will be made in cash. Let's go one by one. What about P? Total 130. So we have to collect or 10,000 rupees from P. So in cash account, 2 P's capital 10,000. Cash account debit to P's capital 10,000. What about yes? Yes, also you have to collect 5,000. So cash account debit to yes 5,000 that you have to collect. What about B? We have to pay B how much? 40,000. Total 170. But debit is only 130. We have to pay 40,000 to him. So in cash column, buy B capital 40. So with that, we have completed realization account, partners capital account, purchasing company account. But in cash account, is it tallying? No. Because in cash it is 35 here, 40 here. In bank 5 and nothing. So what we should do? How can you make a payment of 40,000 to B when you have only 35,000 cash? So what you have done is you have withdrawn this 5,000 from bank and then paid to B. So there is a contra entry to be made for this. Cash drawn from bank. What is the entry? Cash account debit to bank account. Cash account debit to bank account. Now, see the bank column tallies. Cash column also will tally. That is how the problem is done. 40,000 rupees is the total of cash. 5,000 is the total of bank. So now what we have done is we have closed the books of accounts of PN company. PN company accounts are closed. Realization account, partners capital account, cash and bank account. Then finally, purchasing company account and equity shares account. These are the various ledger accounts we have prepared. So that is tally. That means we have closed the books of PN company. Over. So we've answered question number A. Over. Now friends, we have to make journal entry in the books of Briggs Limited for acquisition of PN Co. So Briggs is acquiring PN. We have to make journal entry in the books of the company. What are the journal entries we have to make? That is answer for question B. Journal entries. First entry will be business purchase account debtor to PN company. Being purchase consideration due. Briggs has agreed to acquire PN company by paying a consideration of 3 lakh rupees. So business purchase account debit to PN Co. Now next entry will be what? Briggs is taking over the assets and liabilities of PN Co. Furniture fixture account debit, machinery account debit, stock in trade account debit, sundry debtors account debit, all at book value only because this is the value at which it is taken over. Credit creditors 162,500. So according to the problem, there is an unrecorded liability of 12,500 which must also be taken over by Briggs Limited. So 150 is actual liability plus 12,500 also is taken over. So that is 162,500. Credit business purchase. How much? 3 lakh. Being assets and liabilities of PN company taken over. But remember friends, when a company takes over the business of another entity for a certain consideration, we have to compare the consideration with the net asset. The difference, if any, will be either goodwill or capital reserve. So therefore, we have to calculate the goodwill or capital reserve on acquisition. How to do that? asset taken over minus liability taken over will get you the net assets. You have to compare with the purchase consideration. So machinery 250, furniture 25, stock 1 lakh, debtor 1 lakh, total 475. Creditor 150, unrecorded liability 12,500, total 162,500. So the balance is the net assets taken over. Net assets taken over. But what is the consideration agreed? 3 lakhs. You are taking over assets, net asset worth of 312,500, but you are giving a consideration of 3 lakh only. So there is a gain. That gain is of capital nature. Therefore, what we should do? We should transfer that to capital reserve. Net asset is more than purchase consideration. That should be taken to cap reserve. So when you record the taking over of assets and liabilities, capital reserve will be the balancing figure. Capital reserve will be the balancing figure. That goodwill or capital reserve should be recorded in the books of the purchasing company, not in the books of the firm. It is recorded in the books of the purchasing company, which is capital reserve in this problem. So for the purpose of determining goodwill or capital reserve, we have to prepare a working note like this. Now, what is the third entry? Consideration is settled by issuing shares at a premium. So debit P and Co 3 lakh, credit capital, credit premium. 10 rupee share issued at a premium of 2. So this is the entry for settlement of consideration. P and Co account debit 3 lakh, to capital 2.5, to premium 50. Now one more entry is that this is for what? Mutual owings. Don't forget. Creditors account debit to debtor being cancellation of mutual owing 50,000. Where it is given, it's given. See, the creditors of P and Co include 50,000 payable to Briggs. So between the purchasing company and vendor company, 50,000 creditor debtor relationship is there. Once Briggs takes over P and company need not pay 50,000 to Briggs. Briggs cannot collect 50,000 from P and Co. So this asset and liability will be nullified. So therefore, we have to make entry for cancellation of that. Debit the creditor, credit the debtor to the extent of 50,000 rupees. So these are the journal entries you have to make in the books of the purchasing company. First entry is for the consideration due. Second entry is for taking over asset liability difference taken to goodwill or capital reserve. Third entry is for settlement of consideration. Fourth entry for cancellation of mutual owings. So we have completed the answer for question B over. So A is over, B is over. But still we have to prepare the balance sheet of Briggs Limited after taking over PM. So already Briggs is an existing company. Capital is there, reserve, everything is there. In addition, they've taken over P & Co. So the assets and liabilities of P & Co should be brought into the books of P & Co. We have already made journal entry for that. So when you prepare balance sheet after that, in Briggs Limited, the assets will be assets of Briggs plus the assets of P & Co. Liabilities also will be that. Share capital will increase, premium will increase. Capital account will not appear because against the capital only you have issued shares. So you have to now prepare the balance sheet. Balance sheet, as I told you friends, it should be in the format as per Schedule 3 of Companies Act. In this format, vertical format, proper order, equity liability top segment, assets bottom segment, 4 headings on the equity side, shareholders funds, SAMPA, share application, money pending allotment, non-current liability, current liability, then assets, non-current asset, current asset. It appears you may have to prepare a note for every item in the balance sheet. But I would always suggest better prepare note number 1 for capital, note number 2 for reserves. But where there are more than one item, it's better to prepare notes for every line item in the balance sheet. So let's go to note number 1 for share capital. What is authorized capital? We do not know. So issued capital is taken as authorized capital. That will be 1,25,000 shares of 10 each. Of the above, 25,000 shares are issued to P & Co on acquisition of business. Already 1 lakh shares are issued. Now another 25,000 issued for acquiring P & Co. Very important information, you should write it. If any shares have been received or issued by the company without any consideration in the form of cash, that should be disclosed in the notes. So the share capital will be 12,50,000. Reserves and surplus. General reserve 3.5 lakh. Capital reserve 12,500. Premium 50,000. So the total reserves is 4,12,500. See, the general reserve of P & company is already transferred to capital account. So don't bring it here. General reserve Briggs Limited 3.5 is there. The issued shares at premium, that is there. Then there is a capital reserve on acquiring. Therefore, the total reserve is 4,500. Is there any share application money pending allotment? No. Is there any non-current liability? No. No debenture, no secured loan. But current liability, yes, we have trade payables. Note number 3. Trade payable of Briggs Limited is how much? 6,50,000. Taken over from P & Co 150. Therefore, the total trade payable is 8 lakh. But this includes 50,000 mutual owings. So deduct it. The balance will be trade payable to be shown in balance sheet. 650 Briggs, 150 P, total 8. But this includes amount due to BRICS, mutual owing. On acquisition, mutual owing will be eliminated. So only balance creditor of 750 will appear in the balance sheet. Our current liability, the 12,500 unrecorded liability, we have to record it here, 12,500. Don't jump and put the total now itself. Record everything. We can check the total later. Under non-current asset, property, plant and equipment, better prepare a note. Machinery for Bricks Limited 8 lakh, taken over from P & Co 2.5 lakh. Furniture, Bricks 112,500, taken over from PS 25. So the total of property, plant and equipment is 11 lakh 87,500. So put it here, 11 lakh 87,500. Now coming to inventory, very easy. Add the inventory of P & Co 1 lakh, Bricks Limited 425. So total 525 is inventory. Trade receivable, better prepare a note. So Bricks Limited 412,500, P & Co 1 lakh, total 512,500 minus mutual owing 50,000. So the balance will be 462,500. So put it here. Then finally, cash and cash equivalent. Cash at bank 2 lakh, cash in hand 50. Don't take from P & Co because Bricks Limited has taken over all assets and liabilities of P & Co excluding cash in hand, cash at bank. So only the cash in hand and bank of Bricks Limited will be considered, that is 2.5 lakhs. We'll consider only this. 2 lakh bank, 50,000 cash. It's 252. Put this in the balance sheet, 2,52,000. Now you find the balance sheet is ready. It's all completely tallied. Check whether balance sheet tallies. It will definitely tally. You can check for yourself. Now the balance sheet total is 24,25,000. So meticulously, slowly and steadily, after reading the problem thoroughly, if you solve the problem, you will definitely get the correct answer. Don't be in a hurry. See, still I finished this problem in around 30 minutes. So without any hesitation, without any confusion, can always prepare the answer for this problem correctly. So balance sheet total 24,25,000. So we answered all the three questions. Accounts in the books of P and Co. Journal entries in the books of Briggs Limited, followed by balance sheet of the company Briggs Limited. And everything is done correctly. So therefore, you'll get full marks for doing problems like this in the examination. So friends, I have completed my job. Please feel free to clarify doubts if any, or you have any specific question also, you are free to ask me. Yes, friends, do you have any questions? If not, I'm assuming all of you are clear. So we will have to attempt problem number 5. But what I'm going to do is, I'm not going to do this problem in the classroom. You are going to try. In the break time, that is lunch break, at around 1:30 or so, I will display the answer. You can check for yourself whether you got it right. If there are any questions, you can ask me at that time also. So I'm going to display the answer to you. I may not have time to do this problem in the classroom now. So therefore, let us take a break now for lunch. Join at 2 o'clock. During the lunch break, at some time, I will show the answer for problem number 5 also. I've already informed SARC to send the study material, that is workbook, to everybody. If you are in the group, definitely you would have got it by now. I've already informed them. They will send it to you, but I was told it is already sent. If you are not getting, please check with SIRC. They will surely give it to you. So this is the ledger accounts of P and Co. This is the balance sheet and notes to accounts of Briggs Limited. Then these are the journal entries and working note. So friends, it's time to take a break, right? Please enjoy your lunch, take some rest. If time permits, try problem number 5. I will display the answer. We will discuss and then we will try to do the other problems. So we will meet at 2 o'clock, friends, after the lunch break. Thank you.